What if I told you that you could use your RRSP as a down payment and then get a big chunk of that money back through government rebates if you buy a new build home in Canada? If you're a first time home buyer, this can completely change how fast you get yourself into the market. Hi, I'm Wiza, a Calgary based realtor, and I help people like you figure out their buying and selling options so that you can make confident decisions in today's market. Today, I'm breaking down two powerful programs, the RRSP Home Buyers Plan and the new first time home buyers GST rebate on new builds, and how together they can seriously reduce your upfront costs on buying a home. Let's start with the RRSP Home Buyers Plan. This program allows first-time buyers to withdraw up to $60,000 per person out of their RRSP to use as a down payment on their first home, tax-free as long as you pay it back within 15 years. It's basically an interest-free loan from your future retirement savings. If you're buying with a partner, that means you can withdraw up to $120,000 total. Like I said, you do have to pay this back within 15 years, starting a couple years after you withdraw it. The RRSP Home Buyers Plan allows you to increase your down payment, reduce mortgage insurance, and qualify for a better purchase price. So instead of entering the market with 5 or 10% down, you can enter the market with 15 to 20% down using RRSP funds. This alone can completely change the price range that you can shop in. Now let's add the second piece, the new first-time home buyers GST rebate on new construction homes. So when you buy a new build in Canada, you normally pay 5% of GST on top of the price. But under this new program, homes up to $1 million can get the GST fully rebated up to a maximum savings of $50,000. In simple terms, the government is literally giving you back what you would have paid in taxes on a new home. Now, let me explain how you can actually stack these two programs together to maximize your savings. Step 1, you use your RRSP Home Buyers Plan to boost your down payment or use it for the whole thing. Step 2, you purchase a new build. Step 3, you apply for the GST rebate and get back tens of thousands of dollars depending on price, which means you could also borrow this money from a family member and confidently be able to pay them back once you get the rebate a few months after closing. This absolutely reduces the upfront pressure and cost of buying your first home. Now, I want to be clear about something. This is a strategy. You still need to qualify for all of these programs and use proper structuring, not just assumptions. This combo usually works best when you have RRSP savings already, or you don't have savings, but you make good income and you can borrow the funds through a personal loan or get it gifted from a family member. Let's stop right there. If you wanted to take out a personal loan and go that route to contribute to your RRSP, for one, that money does have to sit in your RRSP for at least 90 days before you can use it as a down payment. And also, there is going to be interest on that loan. It will affect your debt to service ratio, therefore impact how much you can actually qualify for a mortgage. This right here is your last resort. But here's why people still look at that last resort strategy in the first place. When it's done correctly, you're combining two major tax advantages in Canada. You're withdrawing RRSP funds tax-free under the home buyers plan, and if you're buying a new build, you're qualifying for the GST rebate. So you can take out a loan for as much of a down payment that you would need. So for example, on a $500,000 house, that's $25,000 that you would need as a minimum down payment. You would put it in your RRSP, you would let it vest for at least 90 days, but since you're buying a new build, it's likely that your closing isn't until a little bit later anyways. You buy the new build, then you apply for the GST rebate when you do your taxes this year, and you get the GST amount back, in which you can pay your RRSP loan off with that. So this is a hack, but by doing this, you have effectively reduced your overall taxes and cash required upfront by thousands of dollars. If you're thinking about buying this year, this is the exact type of structuring that I help my clients with, because the difference between a normal purchase and a well-structured one can be thousands of dollars. If you want me to break down what this would look like for you and your exact situation, my contact information is in the bio. Just reach out.